Hello everyone, welcome back to Let's Learn. So if you are new to this channel, please subscribe to the channel and click the bell icon to get the latest notification. So today's video is all about international finance. Okay, so in this video we'll be discussing what is international finance, its importance and the reasons for growth of international finance. Then we'll look upon international finance environment and the components of international finance environment and also the risk associated with international finance. Okay, so let's start the video. So first one is international finance. Okay, so what is an international finance? International finance refers to any financial transaction that takes place across national boundaries. Okay, so it is a way to analyze the economic status of a country we may wish to do business with, or judge the foreign market, or compare the inflation rate, etc. Okay, so for these purposes international finance is mainly used. It is a way. Okay, so international finance are broadly concerned with monetary and macroeconomic interrelation between two or more countries. Okay, that is, here we will be comparing the financial transaction or the rate or currency rate or exchange rate between two or more countries. Okay, so once the transaction goes beyond the national boundaries of our country, then only it is known as an international finance or international transaction. Okay, so it examines the dynamics of global system, international monetary system, balance of payment, exchange rate, etc. Okay, so in short we can say that international finance is a study of monetary transaction between two or more countries. Okay, so suppose I am transferring a fund from Kerala to Tamil Nadu, then it is not an international finance. But if I am transferring a fund from India to America, then only it is known as an international finance. Okay, so international finance refers to the financial transaction that takes place across the national boundaries. Okay, so that is international finance. Hope it is clear to you all. Okay, so the next one is importance of international finance. Okay, so what is the importance of an international finance? International finance helps in calculating exchange rate of various currencies of nation and relative worth of each and every nation. Okay, and it also helps in comparing the inflation rate and getting an idea about investing in international debt securities. Okay, so once we know the rate, currency rate, etc. of another country, then only we can go there and invest our fund in other countries. So this international finance helps in studying all that. It also helps in ascertaining the economic status of various countries and in judging the foreign market. Okay, then this IFRS as a part of international finance facilitates comparison of financial statement made by various countries. So mainly international finance helps in comparing two or more countries in case of exchange rate, in case of comparing inflation, in case of comparing the economic status, in case of comparing the international financial facilities, etc. Okay, so it also helps in understanding the basics of international organization and maintaining the balance among them. Okay, so this IMF, World Bank, etc. mediate and resolve financial dispute among the member nations and also helps in identifying international business opportunity. Okay, suppose we think that okay, we have a business opportunity in America, we will be saying it's a financial stability we need, or the financial requirement we need. Okay, so to analyze all these financial needs, it is very important to study the international finance. Okay, so it also helps international corporation to raise fund from global financial market. Okay, that is, we nowadays we are raising money from international market by using ADR, GDR and all. So this international finance study helps international corporations and other businesses to raise fund from global financial market. Then it also helps the finance managers of MNCs, that is multinational companies, to manage foreign exchange and also see to the political risk. It also gives valuable information to the investors for investment decision. Okay, suppose a country is in its the economy is going down. Okay, suppose in another country the economy is graph is going down. Okay, how do we know? If we study this international finance, if we know to compare this inflation rate, if we know to study the economy and the exchange rate of other countries, then only we know that the economy of that other country is going down, so it is not good for us to invest in that country. But studying all this international finance, we can also see that, oh, in some other country the economy is going on a boom, so it is a nice period for us to invest in that country. So this international finance study also helps the investors to take valuable investment decision. Okay, the next one is speculator. How does international finance help speculators? Speculators are those people who are always in search of profit. So they need to closely observe the exchange rate movements, and for this international finance study is a very important factor. Then international finance also provide information to government or regulatory authorities regarding foreign exchange market, international financial market, and also domestic market, etc. Okay, so these are the important points of international finance. So international finance helps in calculating various exchange rate, helps in comparing the inflation rate of various countries, helps in ascertaining the economic status of various country, helps in ascertaining the international finance facilities that are given in different countries through financial statements, then also helps in giving investors the best investment decision, helps international companies to raise fund from global market. So these are the important things of international finance. Okay, so next topic is reasons for growth of international finance. Okay, what are the reasons that led to the growth of international finance? So first one is growth of international trade. How did growth of international trade is one of the reasons for growth of international finance? Nowadays, international trade is increasing day by day. If we go to a supermarket, we can buy or we can get all products manufactured in different countries, right? So international trade is increasing day by day. So for doing international business, companies should know the international finance. Okay, to grab the opportunity to market their products in all countries, every company is in need for international finance. So that is the first reason. Second one is increased globalization of financial and real asset market. That is, with the increase of globalization, people started to invest in other countries in bond, shares, and etc. So for that also we need to know the international finance. So that is also the second reason. Third one is risk of international trade and investment. When we are investing in some other country which have a different currency, there will be a risk. So to measure the risk, to take precautions of the risk, we need to know the international finance. So the risk of international trade is increasing, and the risk of investing in other countries also is increasing. So to measure the risk or to know how to handle that risk, international finance knowledge is very necessary. Okay. The next one is increased volatility of exchange rates. So these exchange rates are highly volatile and it changes in time to time. So it will affect the demand, supply, price and everything. So the people who are investing or people who are doing a business should know the international finance to deal with these volatile exchange rate. Okay, so for that also the knowledge of international finance is very necessary. Then comes the increased importance of MNC and transnational alliances. Nowadays, MNCs are increasing day by day. Many MNCs are coming. So, for doing a multinational business, the company should deal with the international finance of different countries. So, to deal with that, to deal with the opportunity, to grab the new opportunities of the market, international finance is very necessary. Then comes technological innovation. The coming up of internet in every country is one of the technological innovation that changed the whole world. That is, with the help of this internet, we can access to the information of everything in the world. So that has also led to the growth of international finance. So these are the main reasons for growth of international finance. First one is growth in international trade, then increased globalization, risk of international trade and investment, then increased volatility of exchange rate, then comes increased importance of MNCs and other multinational corporations, then comes the technological innovation. Okay, so I hope it's clear to you all. And if you have any doubt, you can comment it down in the comment section and I'll be taking it. Okay. So the next topic we can move on is international finance environment. So what is international finance environment? It refers to sum total of external forces which affect the international activities of business organization around the globe. Okay. So it represents the condition for activity in economy or in financial market around the world. Okay, that is we are taking all the activities that are affecting the international finance in global way, okay, in around the world. Okay, so that is known as international finance environment. Okay, so that is a macroeconomic view. Okay, so now let's see what are the components of international finance environment. Okay, first one is foreign exchange market. Foreign exchange market is a market where the currency denominated in one currency is bought and sold with another denominated currency rate. Okay, so it is a over the counter market and it doesn't have a physical existence. Okay, but people are exchanging currencies to other denomination. That is, people are exchanging dollar to rupees, rupees to pounds or to euros. So that is all takes place in this foreign exchange market. Foreign exchange markets can be classified or is of two tiers, that is wholesale market and also retail market. So in wholesale market, banks, commercial banks and other financial institutions take participate in the wholesale foreign exchange market, and in retail foreign exchange market the main people are tourists and travelers. Okay, so that is in foreign exchange market. Second component of international finance environment is currency convertibility. So, in many countries, the countries restrict the resident or non-resident to convert the local currency to a foreign currency. So, converting currency is a major problem faced by many people in many countries. Okay, so that is also a much important component in international finance because it many international finance businesses use counter trade practices to overcome this difficulty. Okay, so the next component is international monetary system, that is IMS. Okay, so every country should have a monetary system and an authority to maintain and make rules and regulation and to monitor the system. So like in India has RBI, that is Reserve Bank of India, to control and monitor all these transactions. So there is a system needed for international monetary system, like we have IMF, World Bank, etc. Okay. So the next component of international finance environment is international financial markets. This international financial market consists of stock market or Eurobond market. Okay, so these financial markets play an important role in international financial system. They both act as an investor and also a lender. So this is also an important component in international finance environment. Next comes balance of payment. We know that every transaction that goes outside our country or comes inside our country is recorded in balance of payment. So these transactions also are recorded in balance of payment and it is also affect the international finance. So we can say balance of payment is also a major component in international financial environment. So now let's see what are the main components of international finance environment. First one is foreign exchange market. Whatever that occur in foreign exchange market will affect the international finance. Second one is currency convertibility, as many countries still restrict resident as well as non-resident to convert the local currency to foreign currency. So it creates a problem in international finance. Third one is international monetary system. That is, every country should have an international monetary system to monitor the transactions, and the rules, regulations that they make, the policies that they make will affect the international finance. Okay, then comes international financial market. These are markets like stock market where the buying and selling of financial securities takes place. So the transaction that occur in international finance market can also affect the international finance. Then comes balance of payment. Whatever money that comes to our country or goes out of our country are recorded in balance of payment. So this also will affect the international finance environment. So these are the major components of international finance environment. Okay. So next we can see the risk associated with international finance. What are the risks that comes in international finance? The risk can be classified into two as currency risk as well as country risk. Country risk. Okay. And this currency risk is also of two types, that is exchange risk. Second one is inflation risk. Then country risk can be classified into three as political risk, counterparty risk and also liquidity risk. Okay, so let's see each one of them one by one. So first one is currency risk. So as I said, currency risk can be classified into two as exchange risk and inflation risk. We already studied that exchange rates are very volatile and is very uncertain. So the risk arise due to this exchange risk is known as, or exchange rate, change in exchange rate is known as exchange risk. And inflation risk is when the rates are changed due to inflation in a particular country or in a foreign country, okay, that we are trading. So that is known as inflation risk. Okay, so in currency risk are of two types. First one is exchange risk. It is a risk where risk arises because of the change in exchange rate in the market. Second one is inflation risk. These are risks arise because of the inflation rate in domestic country or in foreign country. Okay. Second one is country risk. In country risk, the first one is political risk. Political risk are the change in government or the new policies that the government makes. Because of that policies or because of that changes, there will be changes in international finance. Okay, so counterparty risk, the second one is counterparty risk. It is arised when the other party is not obliged or not doing their responsibility. Okay, or other party is not obeying the rules or regulation. Then it comes the counterparty risk. Then comes the liquidity risk. Liquidity risk are risks that are arised due to lack of ability to sell the asset in the market at the right time. That is, when we need to sell that asset for our money, we are not able to sell it. That type of risk is known as liquidity risk. Okay, so in international finance there is mainly two type of risk. First one is currency risk and second is country risk. Currency risk can be classified into as exchange risk and inflation risk. Exchange risk are risk arise due to changes in exchange rate. Inflation risk are risk arise due to the change in inflation rate in domestic country or in foreign country. Then comes country risk. Country risk can be classified into three as political risk, which is the risk associated with change in government or change in political policies, rules or regulation. Then comes counterparty risk. It is when the other party is not doing their obligation or not doing what they have to do. Okay. Then comes the liquidity risk. Liquidity risk arises when we are not able to sell our asset at the right time. That is when we need to sell them, we are not able to sell them. That risk is known as liquidity risk. Okay. So that's it. So today we discussed about international finance. We saw the importance and the reasons for growth of international finance. We also learned what is meant by international finance environment, and so the components of international finance environment, and also we saw the risk associated with international finance. I hope this video is clear to you all. If you have any doubt, please put it in the comment section and I will be taking it. Also, please give your precious feedback in the comment section, and also you can suggest the topic you want to see. Okay. So if you like the video, give it a big thumbs up and also share this channel to all commerce students you know. And if you have not subscribed to Let's Learn, please subscribe and click the bell icon to get the latest notification as I am uploading a commerce video on a daily basis. So for more commerce video, keep watching Let's Learn. Thank you.